Before I accidentally unplugged the webcam is I don't want to sit on my bed because it hurts my back. So anyway, we're back over here. So honestly, I already marked out the Phoenix model, so I'll just show you guys real quick. Right, so this was the Phoenix model. 1 minute rejection block sweeping out the low with SMT. Below the true opens. So all of this was high resistant liquidity. Every time we push down into this, we fail to break it. That's basically what high resistant is. It's at least my definition of it. We have a sweep of this low with SMT. With this low, and then rejection block gets used. So what's this, right? This is a Phoenix model. Note how it's below every single true open into high resistant liquidity. It's a very high probability Phoenix model, and I said it on stream. I said, yo guys, like, this might be Phoenix model. I'm gonna try and take a line time frame change and state off of it. And now you guys saw me try and take that on stream, and I well, did not take it perfectly. There was no internal sweep when I took it, and then we eventually got an internal sweep, and then I didn't take that one, and I probably should have taken the one that had an internal sweep, but you know what, it's all good. I learned my lesson, which is, well, I think it was a good trade, but I should have been open to taking this one. The reason I didn't take this one, the line time frame change and state off of right here instead of right here, is because we didn't tap the midpoint of the rejection block, and I thought that was suspicious. But in the future, I'm just gonna be like, I'm still gonna take it. You know, I really want to make a market recap today. I kind of think it's important, and I just haven't been doing it. I might do it today, honestly. But yeah, this is a Phoenix model, right? High resistant liquidity. Every time we push into this, we're rejecting it, rejecting it, rejecting it. And then we have a Phoenix model rejection block and soup. And then where's the draw on liquidity? After this happens, below all the true opens, the draw on liquidity is the data high. So boom, then we run up to here. So an important part of today was really understanding this was likely going to be high resistant, which honestly is just, it's not always easy to know, but I mean, we were below every true open, and you know, there were ways to know, right? So anyway, from that Phoenix entry to that data high, that is 7R perfectly. So it's a pretty nice trade, honestly. But it's a scary trade. So this was Phoenix 944 or 943 Phoenix on the 1 minute. Once again, just really high resistant day here. You can just see the way the market just refused, absolutely refused to want to go lower off of these, off of this liquidity curve here. It just refused. It said, nope, not today. I do not want to break this trend line. I'm going to go higher. And so sometimes this is going to happen, and you want to be able to anticipate it, right? A big way that you can anticipate it is true opens, right? For instance, that rejection block, if I see us hit that rejection block in reverse, having taken all the true opens, in my head I'm going to know, okay, data high is probably the new drawn liquidity, right? It's just, it takes time, but you get better at it every day. So once again, high resistant, because it looks low resistant. Looks like we're going to break this trend line every time we come down against it, but we're not breaking it, right? And then eventually we face that rejection block and then run back up to the data high. So high resistant liquidity. So once I see us basically get SMT with this rejection block into this high resistant liquidity curve and start going higher off of this, in my mind I'm like, okay, the market's just not bearish right now. That's what I would be thinking if I could read it today, is once I see us, you know, use this rejection block into this high resistant liquidity with SMT, I'm going to be thinking, okay, market's clearly not bearish, because if it was, then we would not have used this rejection block here and then started going higher. The big key is the rejection block is being used into high resistant liquidity. That's a big key, honestly. Once again, there's your Phoenix model there. So a lot of the time, guys, some of the best Phoenix models will be paired with these high resistant liquidity curves. Something to remember, right? Okay, so let's make some notes relative to this. First of all, right, some of the best Phoenix models will be into high resistant liquidity. Models will be into high resistant liquidity above / below true opens. But you don't even need to take them. You can just use them for bias and then trade alongside them. Remember this for the future. Right, does that make sense, guys? We push down into a rejection block into high resistant liquidity. and we're below all the true opens. We have a really obvious strong liquidity in the other direction. I'm gonna be like, okay, alright guys, I think we're gonna be bullish all the way up there. So we ended up getting a 2022 model off of this, and honestly, I did say it live, but I didn't say it with enough conviction. I knew it was happening. I knew it was. I said, we're getting a 2022 model off of this. And I, once again, tried to take longs again once we backfilled and got a change of state off the first center flag up here. Messed it up. Had I just taken the 2022 model, it would have worked out. Maybe in the future, next time, I'll just take the 2022 model because it makes it easy, but also they're definitely more risky. I'll show you guys what I mean. Phoenix models into high resistant liquidity above or above / below. I'll just say into high resistant liquidity. Past true opens are so nice, and even if you don't take them, use them for bias, right? Okay, so I knew we had that Phoenix model. Next thing I should have done is I should have said, okay, right, I knew there was a 2022 model going on. I said it live. I did not say it with enough conviction. Like, this is a 2022 model, guys. Like, this is. Period. Right? It was really actually really obvious. I said it live. I said, looks like we swept out these lows. This is all high resistant. All of this. We sweep out these lows. Displacement higher. What's forming right here? A fair value gap. Project this out. Oh, wow. 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 The 0.705 bottom ticks it. Yeah, you can't make that up. That's crazy. That's crazy. That's crazy. It needs a third that's crazy. Because that's actually crazy. That is really insane. We might need a nickname for this specific type of 2022 model. I'm not even gonna lie. Like, I said that in one of my past streams, but honestly we do need a nickname for it. The Golden 2022. The golden pocket. The 2022 golden pocket. Ah, I like that. Alright. That's going to be what I'm going to call it. So 2022 golden pocket is going to be whenever I soup right at the 0.705 with a super tight stop loss. Like super duper tight. Okay. $9.55. 2022 model golden pocket on the 15-second. But yeah, the normal way you would take this is just 2022 model. It's a normal one, right? Where basically, right, we sweep out these lows. By the way, it's going into the macro, right? It's like it really, the more you see it, the more you can't unsee it. Like it's impossible to unsee, and then eventually you're gonna see it so much you're never gonna miss it live. You're never going to, because it's gonna keep happening, and you're gonna be like, wow, I see it now, right? Boom, we get that sweep once again below all the true opens. That's how we identify true manipulation. There's that manipulation right there into the Phoenix model on the 1 minute. Then displacement higher, once again below all the true opens. Here, let's real quick, let's actually make a little note and show how this is true manipulation. Why? Because it's below every true open. So now that we identify that as true manipulation, okay, perfect. Hey, what up, Jill? How's it going, bro? Just a chill backtesting session here. Today is a very, very valuable day to learn from, to really get better at high resistant liquidity conditions. Because if you had just anticipated this to here, I'll show you what I mean. So normally this is, when you see a trend line liquidity like this, normally this is low resistance, right? You expect the market to go and basically eventually break through it and then go on a low resistant liquidity run, right? Eventually it's going to run through all these lows. Well, when you don't have that and the market respects this liquidity curve over and over again, this is high resistant. It's not the, I don't think it's the technical definition, but I don't really care. It's my definition. So you can see every time we push into the liquidity curve, high resistant, high resistant, high resistant. If you had been able to anticipate these conditions, you could anticipate first the Phoenix model on the 1 minute, which occurred right after market open, which, well, I did anticipate live. I saw it happen. We pushed down into the rejection block on the 1 minute. I tried my aligned time frame change in state. I got break evened. Didn't take this one because we didn't tap the midpoint of the rejection block, and that one was the one that worked out. Unfortunate. And then, anyway, this is true manipulation because it's below every true open. Here, let me screenshot this. True manipulation because it's below every true open. It's also into our high resistant liquidity. Right? So now we identify that as our true manipulation. It's not saving. Okay, there we go. So how come where's a really good trade here? It's, well, there's a 2022 model, right? Where 90-minute true open was already manipulated. Okay. Displacement higher. Breaking all these highs. Breaking this high. Breaking this high. Breaking this high. And then, yeah, we break all those highs. And then what? Fair value gap, right? Fair value gap. We probably want to include the volume imbalance here. So let's include the, let's measure this out with the volume imbalance and without the volume imbalance. Let's do both and see basically how this looks. So this is including the volume imbalance. 2022 for value gap on the 15-second. And bring this out. Yeah, we 0.705 and then the quadrant and then the midpoint and then boom. And then if you measure out like this, actually this is kind of nice because this one we efficiently deliver this. So this one could be nicer, but we'll see. I don't know. I kind of like the other version a little better. The market was respecting it clearly. So back to the other version. So we include the volume balance here. And then, yeah, we deliver higher. Bang. Okay, nice. So there's the 2022 model, and then obviously we just continue higher. So I guess let's just project, let's just say that we took this to the data high or something. I think that's pretty normal, right? It's a pretty normal trade. Boom. Actually, I'm just going to use an arrow because it's too cluttered. I would take this as an inducement of this low. So I would wait for this low to form, and then we induce it, and then I would take that up right at 955. $9.55 2022 model on the 15-second. Alright, bear back. Okay. I know no one's even watching anyway, so it's all good. I wish I could make a market recap every day. It'd be nice. It's a lot. Like I was saying, today was hard. Today really was not an easy day. Yeah, not easy at all. Now, there probably was longs around market open, and they were actually not impossible to catch. I just was looking at the wrong things, honestly. Unfortunately. And actually, the longs of market open were probably the most realistic trade of the day. I was just not really paying attention, unfortunately. I was looking at the higher time frame, so I really got to actually make sure I pay attention to the higher to market open as it's about to happen. But the longs at market open basically goes to a simple the idea of, okay, find a 15-minute key level, right? In this case, 15-minute for value gap. It's unmitigated, meaning we haven't used it at all, right? So find a 15-minute key level, and also, right, the market looking pretty high resistant here. It's probably pretty obvious that the market was gonna reverse. Okay, well, I don't know what is going on with my computer, but okay. Anyway, volume imbalance here, so I guess we'll mark this out as well. And then drop down to a 1-minute chart. And so basically, right, with all of this in mind, we just accept, okay, this is a 15-minute for value gap. Well, it was unmitigated. Then we reclaimed it here. But that makes it even better. Like, look at this. We use it once, and then we reclaim it with precision. With precision. Look at that. In and out on the 1 minute. It's actually pretty cool. Is that the one I was trying to look at, though? It's weird because this is an alignment of a 15-minute gap with probably like a 15-second change in state, which is strange. But I'm not gonna lie, I think with the gap being this small, I would say it's valid, right? I would say align time frames with whatever it makes sense in the context of the situation, right? In this case, it's obviously a very small 15-minute fair value gap, so I would definitely just say, hey, the market's respecting it. It's a pretty small 15-minute fair value gap. The 1 minute's not really going to align with this very well. So I would just say here, just align this with the 5 second. That's what I would do here. That's exactly what I would do. And so what you end up having is a really nice trade off of the 15-minute fair value gap. Perfectly and efficiently delivered, by the way. Below all the true opens. So once again, sometimes just look at one thing in specific, and that will actually make your trading like really, really nice. In this case, 15-minute fair value gap, sweep of this low, and then align, well, arguably a line time frame change instead of delivery, or just a change instead of delivery off of it, right? But yeah, the more I backtest, the more I realize the aligned time frame is whatever it makes sense for it to be within the context of uh, like how big the gap is, like all that kind of stuff, right? Like there's the default, like usually the 15-minute aligns with the 1 minute. That's the default. But there's cases where this 15-minute fair value gap, this reclaimed fair value gap, is really, really small, and it's not gonna align with the 1 minute at all, really, at all. And so this is where my own understanding of just my backtesting comes in, where I'm like, okay, the 15 minutes obviously not gonna align with the 1 minute here. So I'm gonna align it with a lower time frame that makes sense to me. So once again, here you can see the gap being efficiently delivered. This is a reclaimed gap, remember? So meaning, reclaimed meaning we've actually already used this gap over here. We actually used it once and then twice, so you could argue it's actually a supercharged gap, the term I made for if a gap's used 3 times or more. But I would just consider this just a reclaimed gap. And it's like, isn't it just really cool how the market just obeys the quadrants and stuff? Like, it's just like, whoa. Alright. So efficiently delivered right there. And then what? And then I would take this change in state off of it right here, like that. And then you end up with this really nice trade that was below all the true opens into high resistant liquidity, and it's right after market opens, textbook Judas swing. And honestly, guys, just really have these 15-minute key levels marked out going into market open, because the market really might actually use them. They really might. So I think this is SMT with ES. I could be wrong, but I think it is. Anyway, you can just tell when we get this change in state, like we're gonna go run these highs. Here's market open high, by the way. you can go break even at market open high. That is the real beauty of this, actually, is I can go break even at market open high here. And then what? And then I'm in, risk free. And then I can target, like, I don't know, I can target 730. That's probably what I would target. I would look for the market to run back to 730, take profit there. That is a reasonable target. And you probably have stop loss at the swing low. I'm gonna be so for real. Like, you don't need it past that. Once again, targeting 730 on this. We end up with a trade. Obviously, I'd scale out. But we end up with a trade that's like really, really nice, actually. And obviously, you could even have this even tighter. That's a personal preference thing. If you have it tighter, you end up with a 6R instead of a 5R. 6R, if you have it super tight, you end up with an 8R. But the power of just one good trade, right? So this is flow state at 9:32 on the 15-second, aligned with the 15-minute, which I've never aligned before. The 5-second with the 15-minute. Never aligned this before, but once again, the more I learn in trading, the more I realize it's about the context. It's not about exact aligned time frames. This 15-minute fair value gap is just super small, and I know, okay, I just know that thing is gonna honestly need a lower time frame change in state of delivery because it's so small. And then, we end up using probably this as a Reaper gap. We're going to have to go to the 1 second to find it, but I'm almost sure we do. But yeah, that's how you could have caught longs within there. Now, obviously, there's probably other things here as well. Like, there's probably a 15-second change in state. Let's see. Yeah, nothing I really like, to be completely honest. I guess there's a 15-minute IPG. Once again, I don't know if I love that one, but if you like that, you could take that, I guess. Yeah. Let's see if there's anything interesting that's just, in general with this. Because I don't know. I just want to look around and see if there's anything interesting here. It feels like what happened here? There's something here. CE of a massive gap was the exact low right there. Huh. So remember how I was marking out the quadrants of this gap all the way in the free market, and I was like, I wonder if we end up using any of these. Well, we did. We back tested CE of this. My eyes hurt. We backtested C of it very nicely. I was right. So mark this entire gap out. So any quadrant or midpoint or eighth of any gap, any inefficiency, find a pin bar or outside bar off of it, and that's my new cosmic edge model I just recently started backtesting. So check this out, right? New week opening gap, whole entire thing here. Assuming this is high resistant. We get off of this new week opening gap, we get a perfect reaction off the midpoint. Might even be a pin bar here. I mean a precision swing point. Anyway, it's definitely something. Might be an outside bar on the 3-minute. It almost is, but not quite. I mean, yeah. Not an outside bar that I would take, but well, yeah, I mean, just a very high resistant day. Kind of a difficult day for that reason. But, yeah. I think I'm going to call it because I need to get to bed so I can just show up to live trade tomorrow. So, thank you for whoever's here, whoever watched, and yeah, I'll see you guys later. Peace out.